Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello guys, welcome back, and let's see what we have. First, we look at the weekly time frame. We can see that price was rejected from the upper resistance above and moved down into the range mid, where it is currently paused. For now, we have a really small wick on the lower side, which is not the best look for a swing low. More often we see bigger wicks, and this is also visible in the statistics. Around 94% of the weeks have a bigger lower wick. This does not mean price cannot move up first and then come back down later. For example, we could close this week green, then spend another week in this range, and only after that, maybe in the next month, make a move higher. Another possibility is that price fixes this low already this week by moving down again and sweeping it. From there, we again have two scenarios. Either price breaks lower to the next lows, or we see a recovery where price still closes near the mid-range, which would later lead to a move up. So for now, price is moving up, but we need to keep in mind the poor low and the different scenarios in case price needs more time here. At the same time, price is now hitting the next daily cycle low. We can see this on the daily chart, where the timing window has been reached. The 66-day mark was hit, and if I look at my other indicator, which I used before and still use, we can see it shifting up as well. This is mainly because it is set to 66 days. As an extra, there is this level which, when touched, can trigger a trade. Not just by a touch, but it needs a close below this level, and then the next candle has to close positive. If that happens, it triggers a buy signal. This signal is pretty accurate, although not perfect. In downtrends, it can just keep going lower. But in uptrends, it usually marks zones where price accumulates. We can see this in the previous examples. The target is usually at least a new high in an uptrend, while in a downtrend, price can simply move lower. For now, this level is at 88.422K, and on the 3-day time frame, it is almost at the same place. What this means is that the timing window has been hit now, and for confirmation, we would like to see a move up. However, given the fact that we still have a poor weekly low, I need to keep in mind that price can make another low. It would look better as always, but the market does not always present clean structures. So if it moves up, so be it. I am already in trades. But for now, I also need to analyze how likely a bigger move is exactly from this area. That probability would significantly increase if this area holds and the weekly low starts to look better. Until then, a lower move is still possible. We can see that daily momentum is at the lows and needs a close above 88.4K to cross back up. That is basically where price is right now. This is the number and the area they want to protect. It aligns with a trend line, a few local levels, and also the CME gap around 89.2K. So price is currently at a fair value area, not an exact level, but a zone where there is local resistance. As confluence, the momentum pivot sits right here as well. That means if they want to push price lower, it needs to happen from here. Otherwise, momentum will slowly stabilize, and if price does not break lower, that would imply a move up. So even though we hit the daily cycle low time window, we still need confirmation. Given the fact that the weekly has a poor low, I need to be prepared for another move lower, at least an SFP to fix the weekly low. From there, we will see whether price holds and reclaims these levels or continues to grind lower toward the next levels. On top of that, we also have the FOMC event coming closer. So what we were looking at here was the average reaction before the event and at the event itself. On the 2-day time frame, we usually see an average reaction of around 5 candles. This time, it was closer to 7 candles at the highs, which is still acceptable. The reason is that price was hitting resistance and, at the same time, entering the daily cycle time window, where we usually expect a retrace to form a swing low. In rare cases, this swing low forms while price is still grinding up, but most of the time we see a pullback. This time was similar to many previous cases. Price retraced into the daily cycle time window, and we can see that this also matched the average timing plus or minus for the pre-event reaction. Now we are very close to the event itself, which is tomorrow, Wednesday. By the way, Wednesday is the most volatile day if we look at the volatility statistics. Interestingly, Tuesday is actually slightly more volatile than Wednesday in some cases, but overall, Wednesday stands out with higher volume. It is also the day with the most negative candle closes. From what we can see here, around 55 to 56% of Wednesdays close negative, and Tuesday also tends to close negative quite often. So as said before, if they want to try another push down, this would be the time, today and tomorrow. If the low does not form by late Wednesday, then the chances increase for either a ranging week or a continuation to the downside, where price finds a bottom closer to the end of the week. That is why it is important to closely watch what happens during these 2 days, while price is in the cycle low time window, with FOMC, lunar timing, and at the same time still having a poor weekly low. So this is the key moment. Either they fix the low here, or we stay vulnerable for another push before the week is done. And that brings us to the local levels. First of all, the monthly stats. We see that price formed a low in the first days, then price moved up and formed the high basically at the average time window for an uptrend. And there it rejected, as this was the time window for the low, so price retraced into it. Now what we also got this time is the move made a new monthly low. We had a poor monthly low, if you remember, similar to the weekly one that we have now. Anyway, price hit the new low after the average timing for that. And usually that means, first of all, that the move gets exhausted slowly but surely, because price tends to form lows or highs not so late in the month. But it also means that price has the door open to form basically a proper low, which can happen a bit lower. We saw a new monthly low after the time window, and then we see another move down. So while we are already outside the monthly time window, I would need to wait for the next month and the stats for February, which we will put on the chart on the new monthly open. Until then, I just have the local levels. Of course, we can also have a look at what we can expect next month. Here we have February stats. We see it closed positive 78% of the time, so not bad. Actually, one of the most bullish months with such a number. A bullish wick is usually between 4% to 8%, and the average gain is around 26%. I am not sure why I have 31% below. Maybe I counted something and forgot it. But putting this all on the chart, we would have around 3 to 8% for the wick. That would basically be a new local low, or 8% would be around the overall low. Well, of course, it depends where price would close. If we see a move up before that, and the candle closing lower or higher, then the levels would vary. But for this, we wait for the monthly close. Now, the negative number would be around 17%. Well, that is exactly the monthly swing low and the 4-day order block at 72K. And 26% to 31% to the upside would be around 112K, with 26% plus minus, and 31% would be around 115K. So those are the levels for now. As said, we still need a monthly close to set the levels correctly. But for now, that is how it would look if it closed around here. We will come back to that later. By the way, the timing is around day 0 on average to form the low, and in bullish cases around day 0 to day 6. But something here to keep in mind is that this is an average. If we take a look at every low individually, we can see that a lot formed really early in the month. Day 1 happened several times, and day 2 more or less similar, and other times where it went closer to the second part of the month. So with that said, for now, more often the low was forming in the early stage of the month. So if we do not get a new low until then, and price opens around here, then an early move down could be a nice opportunity. But as said, we still need to wait for the monthly close. For now, it is just a soft preparation to know what to expect for the upcoming days and month. So now we switch to the local levels. I mark out the averages for today, and we shall see where they are. By the way, if you want the same indicator, you can get a 20% discount. The link and the code are in the description. I also share these levels daily, and others as well. So if you want safer money management, you can also subscribe via Patreon and get a link to my Telegram, where I do the updates and share these levels and more things that I don't do publicly. Anyway, if you are interested in this price action statistics indicator, the link is below. It is a very useful indicator for a day trader because you don't have random levels anymore for the day. Most of the time, price moves with the averages based on the previous closes. You can see all the stats here, and you can also set hourly stats and so on. It also works on other markets, but I mainly use it on Bitcoin. For me, it's a must-have for day trading. Anyway, now I mark them out. So now we mark them out, and we see that based on today's average, price can reach the weekly open. But we have a level in between, which is the monthly open. And basically, that is an area which would act as support before the weekly open. To the upside, we have the average gain with the value area high. So these are the average moves for the day. When price comes into these levels, and for example, your bias is up or down depending on your plan, then you can look if there are some levels aligning that can provide a nice setup. Yesterday, for example, price hit the average gain right at the top, and then we saw a retrace. That means more often price is just trading inside the averages for the day, and only higher volatility leads to breaks of these levels. For myself, I'm currently in longs and also looking for longs. As it stands now, my entry is below this current price action, so I see no reason to add to the trade here. If I would look for a new one, it would most likely be in the next lower areas, which would be an SFP of the low as the first area, and then basically down to the next SFP area, level by level. If someone is in a short and we don't see local strength, then these are also levels for a short. For me, I showed you the 12-hour setup, and I already added to it when we got the SFP. The next compound would be lower for the spot trade. As you can see, it would be around 82K. That would be below these local lows, which I mentioned already this month, where I showed you some stats that said it has a low probability for January to take out the December low. Well, in around 5% of cases, it happens, of course. So that means if we are forming the low this month, then I would prefer price not to come down to this area. When the next month opens, I would already like the low to be in and price to make simply a higher low in the next month. Anyway, as said, for this we need to wait for the monthly candle to close. Until then, we have a few levels. That means if a new low comes, then I would look to add and bring my average entry down, while the target remains the same. This indicator you can also get if you join via Patreon. You can use it on Bitcoin or on alts, which I generally do not recommend, as they can easily go to zero. And every time, the risk, even on Bitcoin, never invest all of your money. As it stands now, I am in this trade and still holding the others. Looking at the 12-hour momentum, we can see some bullish divergence. If price makes a new low, then there is potentially a 3-drive divergence, and from there, I would look for a move up. Of course, you don't see me really talk too much about a bear market. I have my reasons, and I can be wrong, of course. But for now, I had no signs for a top. If you want to know more about why, then you can join the Patreon, and there I update it in more detail. The time will come where I will look for the top being in, and based on the stats, it was not the high for now. Or I get proved wrong and need to adjust the stats to the new situation we had. But until then, I keep trading and looking at them as before. That's basically it for now. To summarize, price is in the daily cycle low time window, which it has reached now, but we have a local poor low that needs to be kept in mind, the FOMC event, and a new monthly close coming closer. All that can have small effects, like an SFP or even a move lower to the next levels. Based on the average for today, it would be possible to hit the weekly open. For the trades, I remain in all of them and am aiming higher. The 12-hour setup now has 2 entries, and I will add lower if that happens. To the upside, we need a break above this trend line to confirm the daily cycle low, which means it still can move down. This would already be an extended one. From there, we just need to wait. Whether one trades it like me, level to level and adding to positions, or waits for the breakout, whether it happens from here or from lower, and then counts that as a cycle low where the invalidation can be set below, I will update when that happens. And of course, when the month is closing, we will set the new levels for February. Until then, I hope that was helpful. I wish you a nice day and see you in the next one.